with the move from physical retail to online, but also with the delivery challenges you're seeing on the Amazon side, it's created a really interesting dynamic where people are really willing to shop anywhere to get the item that they want. And it's really just based on price and shipping speed, and that's it. But it has created a very unique level playing field in a way that haven't really seen since the early 2000s, where you just have a lot of people coming into Google, typing in the product and saying, all right, whoever shows up first, I'm probably going to go there and transact. And that's a huge opportunity for merchants and a huge opportunity to start diversifying and selling on a lot of different channels.
On this episode of Deep Dive, I speak with Michael Krakaris, founder and CEO of Deliverr. Michael's been featured on the Forbes and Inc 30 Under 30. He brings an amazing perspective on e-commerce, the impacts of coronavirus on the channel, what brands are doing about it, what to look out for from a fulfillment and logistics perspective. He brings insight at scale from the perspective he has on the industry. So I'm excited for everyone to listen. Here we go. Enjoy. All right, Michael, thank you so much for being on the show.
Thanks for having me on.
Yeah, absolutely. So it is April 8th. I feel like it's important to say that date because all of a sudden a week feels like a month and a month feels like a year in our space due to the new COVID dynamic. High level, how have things been going for you?
It's hectic for sure. We are doing, actually just mentioned to the company earlier today, doing near Black Friday volumes on a daily basis right now.
Yeah.
And so, yeah, I mean, you're at quite a bit. You're operating at very high levels of volume, high levels of stress on the systems. And typically with these sorts of commerce systems, they are designed to handle, 2x, 3x volume. But when you get into the 5x, 6x, 7x over typical daily volume, it's all hands on deck. And what's different between this period and what was before is that, for Black Friday, Cyber Monday, that's a one-time event. And that's kind of a fixed period where, okay, you're going to have certain spikes on certain days. Those days are marked in everyone's calendars. And then, like kind of what the volume looks like in between those days. And then, when it drops off. Here, there is no end in sight. It's every day is kind of like a Black Friday in terms of the volumes that you're seeing. It's hitting completely different categories than Black Friday hits. So that's also brings a unique challenge because now we're getting a better understanding around the categories we can expect to hit these sorts of 10x, 20x improvements in volume. But yeah, it presents this unique sets of challenges from scaling. And so that's where the majority of our focus has been the past 3 weeks. And how can we scale the network? How can we continue to take this volume? And then also, you have the developments with not just with physical retail closing, but with Amazon, not accepting, new inbound shipments for non-essential inventory, which has just kind of put a lot more sellers into the Deliverr network, and it's just something that we have to handle.
Yeah, absolutely. I want to dive into that a little bit more, but before we do, can you just give our audience some quick context on Deliverr, and then especially how you've been helping out brands in the last 3 to 4 weeks since the stuff hit the fan?
So Deliverr's a Amazon kind of FBA-like fulfillment service for online merchants. So we, regardless of where you're shipping, whether it's your own website, eBay, Walmart, Wish, even Amazon, we offer really quick, usually 2-day or next day delivery at pretty affordable rates. In terms of what that benefit is, there's 3 things. Number one is access to Prime-like badging. So we support Prime-like badging programs across literally almost any channel you can sell on today. We're one of the biggest provider right now across Walmart's marketplace for 2-day delivery. We're a big provider fulfillment for a lot of eBay sellers. Fast and Free is their badge. And then we have a 2-day and next day program we've built for Shopify stores that's been getting really a lot of traction and really gaining popularity over the past few months. And then also even support, have done it on a limited basis, but for select sellers supporting Seller Fulfilled Prime, even though right now we've put that program on pause. And so that's number one. You get access to these Prime-like badges to help you sell a lot more. Number two is access to really quick and affordable pricing. There's no long-term contracts. You can use as much or as little as you like. And the pricing is just fixed price. So regardless of where you're shipping to across the country, you pay just one rate. And that just gives a lot of predictability in that kind of FBA-like model. So sellers with thousands, tens of thousands of SKUs in their catalog, you know exactly what the cost is. Last piece is just hassle-free. And so whether you need to send in, 20,000 units, 100,000 units, or just 5 units, you're able to get started. You can, self-serve. More than a quarter of merchants that come into Deliverr don't talk to anyone before getting started. And you can use as little or as much as you like. And what's unique about the model, and partly the reason why you're seeing us take so many sellers right now and expand our volumes, is that we're an asset-light model. So we don't own any of the underlying assets. We don't own any of the warehouses. We've built a translation layer into all these different warehouses. So it's like an Uber-like model where even though you're dealing directly with Deliverr for everything, we're orchestrating different carriers, different warehouses to get that order to the end buyer. And that enables us to expand capacity very fast.
Yeah.
Which is obviously in a time like this, very helpful.
Yeah, absolutely. I mean, I know there's plenty of 3PLs out there that I'm sure, have their phones ringing off the hook, but if they have fixed capacity, there's only so much they can do, where you guys can obviously scale a lot faster. So talk to me a little bit more about kind of what you've been doing in the last 30 days or so to help, especially these brands on Amazon that have had basically FBA suspended for the time being.
Yeah, I mean, certain things just kind of happened. And so, you kind of see on the FBA side, you can't send in inbound shipments on non-essential inventory. And so that created a huge need where all of a sudden, okay, now I need to find another fulfillment provider for Amazon. And sellers are, for the majority, that Amazon ecosystem, sellers are pretty much predominantly reliant on that ecosystem for all of their infrastructure. And it helped a lot of sellers get to scale, but once they got to scale, they didn't really diversify their business. They kind of kept everything in that same ecosystem because it was so easy. And here you see a shock to that way of thinking and a shock to that model. And so all of a sudden, a lot of sellers can't inbound. Even sellers who are allowed to inbound, they all of a sudden start seeing the delivery times of their inventory go from what was 1 to 2 days to 3 to 4 weeks, with very unpredictable delivery times. Sometimes it's getting there within a few days, other times it's taking 3 weeks. And so even they are looking for options as well. And then you saw last week, Amazon updated their algorithms where they're like, okay, just go FBM. If you can do that, we'll give you the buy box. If you can do that at the same or better price and just better delivery time through FBM, just go do that. And then yesterday, they have the announcement saying, okay, now if you're an FBM merchant and you're using TBA, you can no longer do that starting June 5th. So there's all these kind of unravelings going on that are impacting sellers who are purely dependent on that ecosystem for all their infrastructure. And so they're seeing a shock to their model, and it's being met with I'm seeing two camps. Number one is denial, which is very common. Like, oh no, it will come back within the next day or so. It won't, they just don't believe that it failed. And they're kind of struggling with that reality. Number two is just extreme level of urgency. So, because we work with some of the biggest sellers on Amazon today, primarily to help them with channels outside of Amazon, a lot of sellers are already familiar with us. And so, they came in and were like, okay, can you handle kind of the FBM side or a combination of that? And that created a, interesting dynamic there. And so with them, there's a huge level of urgency where they're saying, okay, how fast can I get this inventory in terms of hours? they're talking about the onboarding time, not even in terms of days. So, some of them gotten started in 24, 48 hours. I mean, they've done some crazy things to get us inventory really quickly. And so what we've been doing is helping these sellers come on board, obviously helping them with their FBM, their Amazon shipments. We're fulfilling orders for some of the fastest moving products on Amazon today, literally at the top of search, organic and paid. A few of those items are being fulfilled by Deliverr. And number two is that not only are we helping them with that, but now since their inventory is in an independent fulfillment service, they can get started on a lot of channels, and they can now move beyond just being siloed in that one ecosystem. And that's also interesting because you're bringing a lot of inventory. It's very interesting SKU selection, and we're kind of helping them. Okay, where can you sell this elsewhere? Whether it's your own website or some of the other channels out there, to help kind of make it a more resilient business model for some of these bigger Amazon sellers.
That's great context. I'm curious. So we're in the middle of this very, very volatile period right now when it comes to e-commerce because of all this change in consumer behavior. Not going to play doctor on this podcast, but if I were to guess, I would say there's this extreme period of social distancing for a month, 2 months, maybe a little bit longer, and then probably some sort of like new normal state where there's still an elevated level of social distancing, but not everybody's doing it. Basically, in aggregate, there should be kind of more people buying stuff online than typically would because of lack of going to brick and mortar. Whenever we reach that sort of like, phase 2, if you want to call it, or new normal, how do you think that impacts e-commerce overall and specifically on the fulfillment side?
It's a unique question, and I think it's something I was talking to a few reporters on this last week because they're trying to get an understanding around this as well, and obviously the big retailers are trying to figure it out too because they've all made their purchases for the next few quarters, and they're trying to figure out, all right, is this inventory really going to move in stores, or do we have to start thinking through our online strategy? So I think want to start with like a stat that I use quite a bit. I monitor. It's the Federal Reserve Bank of St. Louis looks at online retail as a percentage of total retail sales. At the end of last year, it was 11%.
Mm-hmm.
Now, what's happened is physical retail is shut down. So that has changed. Now it's probably over 70%. I mean, it's grown in a way that Amazon wasn't prepared for. We weren't prepared for. Walmart wasn't prepared for. No retailer was prepared to go from 11% to 50, 60, 70%. And that's why you're seeing, a lot of e-commerce is doing near Black Friday volumes, even though discretionary spending has probably contracted a lot.
Yep.
And once those reports come out, you'll probably see like discretionary spending has come down quite a bit. But because online retail was such a small percentage of physical retail, and it's been forced to occupy a much larger percentage in order of magnitude what it did before, that expansion is just tremendous, right? And puts so much load on the systems, and that's why you're seeing a lot of the slowdowns across the different retailers. And so that's number one. Number two, though, is when things kind of come back, what is it going to look like, right? Because right now you have, online retail as a percentage of total retail, just taking a huge chunk out of it. Now, it had been growing consistently for the past 5 years, really since Prime came out, which really changed this whole idea around convenience for the online sphere. It really changed that ecosystem, the online ecosystem, saying, okay, I can actually buy some items that I want online instead of having to go to stores. Then last year, Amazon made the big difference to say, okay, now we're going to offer next day. And so then what that started saying to buyers is, okay, I can start buying essential items like Kleenex, wipes, things like that. And I could just go and buy that online instead of having to go to my local CVS or Walgreens. And so that's where you saw a big jump between like 8-9% to 11%. And you're starting to see it continue. So now you have this external wave that's coming in and pushing that even further when next day delivery is getting rolled out pretty rapidly with services like Deliverr or Walmart or Amazon. And I do think you're going to see, while discretionary spending is going to retract and continue to retract for the remainder of 2020, even though like e-commerce as a percentage of total retail is going to drop back down, it won't go back down to 11%. I think buyers are going to start understanding this convenience of being able to buy essential items, which is where the majority of volume happens in commerce. It happens with essential inventory. They're going to figure out that, okay, I can actually just buy it online. And I optimize social distancing, but I'm optimizing convenience. when a lot of buyers weren't really in that mode yet of trying that out. So I think it's accelerating things at a rate at which we didn't predict before. So yes, I do think total retail will be smaller at the end of this year, but I think the difference, the gains that e-commerce is going to make through this year are going to offset any difference in total retail. And if you want to have an idea around what it will look like, you have to look to China right now, where e-commerce sales are remaining very strong, even though they've gotten out of this COVID lockdown mode. And I think it's going to continue. It'll retract, but it won't go all the way back down to that 11%.
Yeah. Yeah, that makes a lot of sense to me. I mean, I think I've talked about this with other people, and it's not purely speculative, because if you look at, in my world, Amazon specifically, but it applies to other e-commerce retailers as well. If you look at behavioral changes or like big spikes in overall consumer demand, i.e. Q4, what you always see happen on Amazon every Q4 is that they end up with a lot more repetitive customers that keep coming back after the Q4 spike. So it always spikes. They're not doing Q4 volume in Q1, but the Q1 in terms of new customers, new shopping behavior, customers that maybe shop for, toys historically or just media historically, now are shopping for consumer electronics and office products and pantry items. You see that shift in smaller ways become more permanent once a customer sort of pushed into a certain buying behavior. Maybe I go to stores for my everyday shopping, but Christmas shopping is such a nightmare that I do it online. Oh, wait, that was a good experience. I can just keep doing that. So we know that already happens. This is just an extreme amplification of that.
And yeah,
Right.
I mean, it's like that Q4 holiday every day,
Yeah.
right? With now, not just that, but you can't go to Macy's, you can't go to Nordstrom to buy things, right? You're stuck with one channel to buy things, and everyone is, regardless of your buyer profile. And I think in terms of, because I didn't get to the last part of the question on how does this impact fulfillment and shipping.
Sure.
I think that, I mean, it says around that it needs to get faster. The convenience needs to be there to really maintain this stickiness. If the convenience goes away, like for example, if the Amazon delivery times stay at 4 weeks out, once physical retail comes back on board, well, yeah, you'll lose the stickiness, right?
Yeah. Sure.
The fast shipping component needs to hold around 2-day and next day, so the convenience part stays, and there will be an increased focus on that. Because overall discretionary spending is going to shrink. For us to continue to take market share away from physical commerce, it's going to require extraordinarily fast shipping speeds, which is why this year we have a huge initiative to just continue to expand our next day coverage.
Yeah, that makes a lot of sense, especially I think once we go from this kind of panic buying phase, which is I need this no matter what. Yeah, I'll wait a week. Yeah, I'll pay double. Yeah, I'll do lots of things I would usually never do because I want 2 months worth of canned food or toilet paper or whatever it is. I think we're actually coming out of that probably already as a country, where the stock up has pretty much already been done for most people who are going to do it. But once we settle into this, my shopping behavior is somewhat normalized, but it's just now shifted disproportionately online. Now you start having customers going, okay, I have more options, across e-commerce. So now I am going to prioritize the things that customers usually prioritize, which is price and convenience. So I agree. I think that becomes as critical as it's ever been, but the opportunity is just so much bigger now, in terms of just so much more shopping going on online.
Yeah.
You mentioned prior to our call that you had some kind of just wild anecdotes or stories from the last month in terms of things that have happened to sellers or even specific categories, in terms of demand. Anything just outliers even that are notable?
I mean, we had a few. I'll try to list as many as I can remember. First one that was interesting, because we're now, it was kind of good timing. We started building our category intelligence model, where we're now, because we service so many different channels. Prior to 2020, we didn't really have a good understanding around what were the different categories, how did categories change in terms of their performance, and we got that built out in March, which was great. And for this, because Then we started measuring volume at a category level and how it changes, and saw some wild trends as we got into this period. The most interesting one was art supplies. And you would expect that it's non-essential, which it is, but their volume is almost near what essential categories are.
Yeah.
And then I asked, around the company, and then a few of the parents said, yeah, I had to buy a bunch of art supplies for my kid because the kids are all at home. Yeah. And it kind of happened when the stay-at-home orders came in for the school districts. But then what was interesting, we're like, okay, cool. You have this shock to art supplies, so now it's going to come back down once the kids get their supplies. It's not going down. It's kind of flattened out, but the growth is consistent in that category. And this is now 4 weeks into it. And that's really unique. And so what we're seeing is not only did people start buying sets at the beginning, now they're buying replenishments of those sets. And they're continuing to use it quite a bit. So the art supplies category is up well over 100%, almost 200% for certain sellers in a category that just you never would have thought would be impacted this way, but it is. And you're also seeing like the exercise equipment category, that one really spiking. So there are a lot of non-essential categories that are experiencing Black Friday, Cyber Monday like volumes because of these unique changes in buyer behavior. What you're also seeing happen is a lot of coverage because we have a lot of the top supplement sellers on Amazon. Like if you were to type in any type of supplement, probably half that page uses Deliverr for one of their channels. So we have a lot of selection when it comes to these different supplements. And some of them make sense. They start exploding in volume, like vitamin C. So we have a lot of the top vitamin C sellers on Amazon and Walmart use Deliverr. And so you see the spike in volume, you see that 10x and 20x, and that makes sense. Then what you start seeing, though, are these articles about, this supplement helps prevent COVID. And it kind of, these articles come out of nowhere, but when and who knows how much truth there are to these articles, but when they do come out, the volume you're getting hit with these massive spikes in volume where you're like, wow, this is like, we've typically had sellers on Good Morning America, and those volumes looking at 100x increase, but to prepare for it. And like, for example, last week we had a seller where their supplement item was featured on the main Us Weekly article for the day, saying these supplements can help you help your immune system. And I mean, just the volume that comes after that is just mind-boggling. And kind of speaks to that idea around panic buying, which is definitely a more, unhealthy behavior, but is something that you just have to be able to, to be able to handle, right? These just very unexpected spikes. So you're not really sure where it's going to happen. So we're kind of looking at our whole supplements catalog and trying to figure out where do we think the next spike will be, and then trying to build redundancy in those categories. So that's been another really unique thing. A third thing that's happened is that a lot of sellers' warehouses shut down, so they didn't want to keep operating. And so what we've had to do, and we had to do this for one of our merchants, really large shoe merchant, we had to have 2 people reopen the warehouse, prep all their inventory, and then we had to send trucks to that warehouse to pick up pallets and pallets and send that into the network, because they just did not want to operate anymore in their own location. And with the Deliverr network, because there's so many different locations, if there is a COVID outbreak, we can move it across these 30 plus nodes in the country. And so we've had to do that. And then also sellers are now setting up direct lanes from China coming into our network, where before it used to send to like an FBA prep facility, now, or FBA or Deliverr prep facility. Now they're just sending it directly from China, and they're basically training their manufacturers to run Deliverr prep to speed up replenishment cycles, which has also been really unique. It's amazing how fast some sellers have been able to get inventory in from China into the Deliverr network to just maintain their stock, which has been really surprising, but a good surprise to see.
Yeah, absolutely. Well, I think that, as we likely enter this phase of kind of rolling social distancing, which may be by city, by neighborhood, by state, we'll see. That flexibility in your network, I think, is going to be extremely beneficial. I mean, it wouldn't surprise me if Amazon, over the coming months, maybe year plus, has to temporarily shut down different FC locations if they have an outbreak in a specific area. They also obviously have a huge scaled network, so it probably won't be that disruptive. But for those that have like a single warehouse, if their city is impacted, then that can certainly be a problem, a very acute problem for that period of time. Um,
Yeah.
the art supply thing, just going back to that, is super interesting. I think it's pretty obvious to most people because they can just look at their own behavior and what they've seen. Some of the categories are obvious. Yeah, sanitizers up, obviously. Food, some of the pantry items. Okay, we know that.
Yeah.
Hockey gear probably not doing too well. But then some of those other categories are really interesting. Like I think bread maker right now is one of the top 100 search terms on Amazon. So there's some things that aren't like
Blenders.
required. Yeah, yeah,
That's
but
a big one. Like that's been really spiking. Home category has been way up for us. Yeah.
yep, yep, yeah, same for us. It's there's sort of the immediate like first order effect of reacting to this. I need food. I'm not going outside. I'm staying inside. Like the really, really obvious things. But there's all this interesting kind of second order effect stuff. Like adult coloring books are kind of back in vogue all of a sudden. Like you
Yeah.
don't have to use an adult coloring book, but it's these kind of like different psychological effects of, I don't know, it's calming and you're staying inside. So that's maybe something you do more often. But yeah, it's been really interesting. I mean, we're basically in like the most radical overnight social experiment that's ever happened in the United States.
Yeah.
And we're
The
we're
other the other
yeah,
piece
go
is
ahead.
price. I mean, the if you segment categories by price, you see rapidly different diverging trends. Like for example, we segmented. So you look at apparel as a super category, and you see kind of a kind of flat down.
Yep.
When you segment it between women's cheap clothes like sweatpants and cheaper dresses, and then women's premium brands are down 60%. Inexpensive apparel for us is actually up like 5%. It's almost flat. So you're also seeing things along that segment within the same super category, this extreme elasticity to price at a level that we weren't used to and we've never really seen before because you've had these, unfortunate events with these mass layoffs, less discretionary income,
Yep.
and also just, less going out and changes to social behavior.
Yeah, for sure. The most volatility we've seen is in fashion,
Yeah,
across our clients, because to
that's
your
for sure.
point, I mean, you can call fashion this broad category, which it is, and make kind of some assessments about it, but it really, really differs by category, by price, because you're in a very different mindset when you're kind of displaying something externally versus using it, just for a more practical purpose. You need to go for a run, you need to be comfortable, whatever. Those are two very different kind of behaviors, and coinciding
What's
purchases. So
What's unique about that though, and one thing that's somewhat better for that though, is fashion is used to volatility.
yes,
So they basically know, okay, here's my catalog for the quarter. Then I change catalog,
yep,
right? The category that's not used to that volatility is vitamins and supplements. Like they
mm,
are, if you look
yeah,
at your vitamin supplement sellers in Black Friday, it's the exact same volume. Like it does not change. Even like I remember the sellers were so excited for the week after New Year's because they're like, oh my god, this is our big bump, because it's
sure,
a year new me. And they kept telling us, oh yeah, expect really big volumes. It's gonna be so exciting. So much is going on. And the volume increase was like 20%. It was like 20, and I'm like, wow, like you had these fashion sellers that we had in Q4 doing 10x, 15x, 20x volume, and then the nutrition guys come in and do 20% more,
yep,
and that's their big, and it just goes on for like 10 days and then it's over. So they're not really used to these incredible volatile movements, versus fashion has a little bit more, has this more dynamic element to their replenishment cycles. Supplement sellers, they don't have that. They're not used to, oh my God, this is 10x the volume what I'm used to seeing. And you're seeing them, it carries on to their manufacturers. So we found that we have multiple sellers that use the same manufacturers, and those manufacturers simply we're not set up for what happened here. We're not set up for 10x, 20x volumes, because the volume is just has traditionally been so consistent and so predictable in that category, and that's created a big shock throughout the supply chain.
Yeah. I'm sure that makes a lot of sense. This is kind of a crystal ball question, but you have such a great perspective on just scaled logistics fulfillment. Amazon's current struggles, due to just the overwhelming volume they're seeing prioritizing essential product, where they've restricted or pulled back both on the inbound and outbound side of things. Sort of, crystal ball, when do you think that normalizes for them? I mean, the date at which we go, okay, things are back to normal from being able to send things into FBA. Every customer now has a prime promise on every product that's in fulfillment centers. Like, we've had this, okay, it was April 5th date. Now it's pushed back a little more. There's been virtually no indication of when things will normalize on the outbound side of things. Do you have any idea from kind of your view on what that would look like?
Man, I'd love to know that for Deliverr's sake, because
Sure.
they can figure out when we can stop working 13-hour days. So
Yeah.
I think it's it's really hard to tell, and I think I don't really have that level of visibility with that with Amazon on those things. But in terms of like just from an outsider looking in on some of the emails they've been sending out, they kind of are indicating what they're doing and the things they're trying to improve to be able to handle this volume. So they're doing the right things. Like the things that they've been doing are actually things that, like, internally at Deliverr, like, we're discussing like some of these strategies to be able to handle extraordinarily high volumes. Now, our volume increase isn't really representative of the Amazon volume increase because we didn't have as much essential inventory as they do. And I think something that is being overlooked is that one-piece selection. The three-piece sellers, not a lot of them, if you look at them in aggregate, have essential inventory. Like, there aren't a lot of sellers who resell Procter & Gamble items or Unilever items that typically sit in the 1P catalog. And that that inventory is not just up 10x. Like, that inventory is up 20, 30, 40, 50x.
Yep.
And that's not like that. Also, that inventory is not used to doing that.
Yeah.
I've talked to a few big retailers who work with those big brands. They're mentioning they're obviously major supply chain. There's a lot of stress on those supply chains. And so that volume obviously is bogging down things. You also have, so you have two elements. You have freeing up warehouse space. Three elements: freeing up warehouse space, freeing up warehouse labor, and then ensuring the carriers are working well. And so in terms of like freeing up warehouse space, they've talked about that as well to sellers, where they mentioned that they're removing meltable inventory from their warehouses within the next month. And that makes a lot of sense because they're trying to free up space and they're seeing this inventory that probably cost them a lot to hold. And they're saying, okay, can we get rid of that? It's not a huge seller impact because there probably aren't a whole lot of sellers that handle this, but it frees up space. We can take more. So that's number one, check. Number two is they're saying, okay, well, we need more labor. And there's, obviously have labor issues. We have labor issues across our warehouse network. And they're doing that two ways, which are both intelligent ways, where they're saying, okay, we are going to hire a lot more workers. So that makes a lot of sense. But obviously that takes time. But two, we're going to not take inbounds for non-essential inventory. And that is, while that's also a thing on space, that's predominantly a labor decision, where you're saying I can get more productivity if the people at the warehouse only work outbounds, which is shipping out to buyers, because then they don't have to context switch between receiving and outbounds. And we've actually done a similar thing. We didn't shut off inbounds, but we on Mondays now because you have higher level volumes, we've instructed our warehouses to not work inbounds on Mondays. And we've mentioned that to our merchants because it actually gives a lot of capacity on the outbound side, which is a very smart move to make. And so that was number 2, what they did. Number 3 is the carrier piece. And this one is a trickier situation because they obviously use UPS a lot, but there's only so much UPS can take. But they use their own carrier a lot. And they had done a lot of things last year to start using their own carrier a lot more. And that's a good thing, but when you start seeing unexpected influxes in demand, it's even harder to handle that on the carrier side than on the warehouse side. And so by moving away from outsourced carriers and a lot of those regional carriers to moving to a centralized, asset heavy, we own this carrier model, that puts a lot of stress on the network and partly why you're seeing the delivery times you are. And so with that's why they said yesterday, if you're doing FBM and you're using TBA, we just, starting in the next few months, we just won't be able to take it because it's just taking too much volume. And so they really kind of hit the 3 core areas that you have to hit to get capacity going. And they've given between 1 to 2 month timelines on all those different areas. So yeah, I'd expect 1 to 2 months as things go back to normal based on the decisions they made. So they're making quick decisions. It's good. But obviously with the volume they're seeing with the 1P side, also being an asset heavy model, it's not like a, next day this is going to change. It's going to take a few weeks.
Yeah. Well, I think that's a great perspective to actually be able to break it down, because, so often sellers, vendors, anyone in the Amazon ecosystem is just frankly kind of, all they have is the messaging they're getting from Amazon. And unfortunately, and I don't really blame Amazon for this because it's a very fluid situation, but you feel a little bit like you're sitting on the tarmac and the pilot's telling you the plane's going to be delayed a half an hour. And then he comes back a half an hour later and says, oh, it's another half an hour. And then you're wondering how many times is he going to say this before the plane actually takes off? So, so that context I think is really helpful.
Yeah.
Is there anything else, Michael, that you think our audience would benefit from knowing?
It's a good question. I think the other thing that we're seeing is, because we're fulfilling orders across so many different channels, we're starting to get an understanding of how buyer behaviors are changing across channels. And it was around 2.5, 3 weeks ago when Amazon updated their delivery times to 3 to 4 weeks. It took 1 to 2 hours to see a difference in volume on the other channels. That was it. That was how fast we saw buyer behavior move. And what's interesting, and we're going to start talking about this a little bit more in depth on the Deliverr end, is this idea around a commerce graph. So understanding where your buyers are, how they're discovering your products, where they transact, and then how they fulfill. And so with the move from physical retail to online, but also with the delivery challenges you're seeing on the Amazon side, it's created a really interesting dynamic where people are really willing to shop anywhere to get the item that they want. And it's really just based on price and shipping speed. And that's it. You can see an eBay listing outperform an Amazon listing, or a Walmart listing outperform an eBay listing, or a Wish listing outperform a Walmart listing, because buyers are really just looking, I need this. Who has the best price? Who has the best cost? So it's a great opportunity if you want to start your own website or you want to try that out to get in front of buyers. Now the ad spend piece is getting a little bit, depends on your vertical. Some verticals it's like really increased. Other verticals are kind of more consistent. But it has created a very unique level playing field in a way that haven't really seen since the early 2000s, where you just have a lot of people coming into Google, typing in the product and saying, all right, whoever shows up first, I'm probably going to go there and transact. And that's a huge opportunity for merchants and a huge opportunity to start diversifying and selling on a lot of different channels.
Yeah, that's super interesting. I mean, it's essentially, and maybe literally, as if Amazon uninnovated, in reverse about 12, 15 years, where they did have 2 or 3 week delivery promises on a lot of products. And it's because it's all relative, right? I mean, that's basically what I think the big takeaway here is for consumers. Like, they don't love Amazon. They don't shop on Amazon just because. They shop on Amazon because they get something very specific, a level of service, a price, a delivery time that they want. And when they don't get that, their loyalty evaporates pretty quickly. And they just go look elsewhere. So I think that makes a lot of sense. And I agree. I mean, I think, I think this is a boon for e-commerce overall. But I think, if anything, it's just kind of accelerating a lot of the trends we would have already seen in terms of this shift into
And
the
the sellers who are really taking advantage of this and really performing well, and it's a little bit unfortunate, but it's kind of the reality. You have these top 5, top 10 sellers on Amazon, and what a lot of them do, they actually don't really use FBA, the top 5 guys, the top 10 guys. They have either their own warehouse system or they've partnered with different, warehouse providers, and they do FBM. But because it's all sitting in their own fulfillment service, they cross list everywhere. So they put the same selection everywhere and the same convenience and the same speed. And so for them, they're having a field day because they, not only on the Amazon side, they're seeing all of a sudden, because they've been FBM the whole time and they have such a selection advantage to begin with, they're having huge increases in volume there on the Amazon side and doing great there. But they're cross-listed everywhere. So their GMV across all these different channels is just taking off. And those are the guys that are they were already bigger than most of the FBA-dependent sellers. I think that gap is widening.
Interesting.
With what's going on here, at least what we've been seeing. And the sellers who put everything in one consolidated service have a tremendous advantage, even though they might not have the Prime badge. Some might have Seller Fulfilled Prime, but even if they don't right now, because it doesn't really matter a whole lot for the time being, they have a fundamental advantage over the sellers who, again, over the majority of sellers who are just overly dependent on an ecosystem for all of their infrastructure.
Yeah. Wow. That's fascinating. Michael, this has been great. If people want to learn more about Deliverr, and I'm sure your website traffic is at an all-time high, what's the easiest way to do that?
Yeah, I mean, go to the website. We've extended, obviously, like live chat hours, and if you need to meet with someone to get started, we're trying to do our best to handle everyone's requests. And so if you go to the website, you can sign up. You also don't need to talk to anyone if you just want to get up and running very quickly. So we have sellers doing that as well. So go to Deliverr.com. It's Deliverr with 2 R's. And we hope to see you out there, and always happy to chat. We're trying to do bi-weekly Q&As also with our seller base. So on a frequent basis, I'm trying to communicate with our sellers. They can ask questions, things around the network. A lot of the topics that we covered here, we're trying to communicate that openly and freely with our seller base. So we continue to learn and continue to improve.
That's great. Michael, thanks so much for being on.
All right. Thanks, John.
This has been a conversation with Michael Krakaris from Deliverr. Thanks to Michael, and thanks to everyone for tuning in. Make sure to subscribe to eCommerce Deep Dive on your favorite podcast app, and you will be notified when we release new episodes. Thanks, and we'll talk soon.